Hi, everyone. I'm Laura Cook. For those who I haven't had the pleasure, I know I've spoken to most of you, but I've been with Bridgewater Bank now for going on 3 years, but in the industry for about 16. So I brokered in BC, was Home Trust in Vancouver, Home Trust in Calgary, MCAP in Edmonton, beautiful Edmonton. So BC girl at heart. And then of course, Bridgewater Bank here back on the alt side for 3 years. So let me know what you need from me as well. Always happy to help. And if there's a different approach or just you want some one-on-one stuff, let me know. I'm happy to do that. Feel free to ask questions as we go along. It's a great group. So yeah, just raise your hand, interrupt me, or like Pete said on the chat there, feel free to ask there as well. And I'll do questions at the end too. So if you have maybe more of a longer one or deal example, we can go through that too. So on today, I'm not going to do a huge product dump because I find a lot of the time, especially with alt lending, and you guys will know, it all makes sense till you have an alt deal in front of you. We call a lot of gray areas that we can do, a lot of massaging of deals on the alt side. So our website that I'll end with has a lot of great material, but it's best to reach out to your BDM and you and I can kind of talk through a deal because there's lots of exceptions and lots of changes constantly, which is great. But yeah, it's not always so black and white in our world. So a little bit about us, if you haven't dealt with us before, we're Scheduled I bank and we're located in Calgary, Alberta as our head office. I'm in Edmonton, but I'm really lucky. I get Interior, BC, Red Deer, Edmonton, and Saskatchewan. So lucky to take on part of that BC territory. Feels more like home. We have over 20 years in lending and we're owned by AMA, which is equivalent of BCAA. If you're just talking to your clients. So especially in Alberta, it's a really like Alberta proud brand where it's really well recognized. So level of comfort there too. And that adds to the brand overall. So one of the benefits too to being in Calgary, you'll see is kind of on the west side here and having head office in Toronto is it really reflects in our lending areas out west, which is a really big niche for us. So as I mentioned, I'm not going to do a huge product dump. I'll just briefly touch on, and then I'm going to really more focus on some of our niches and stuff and really go over our lending areas in your guys' region as well. So we have our Gateway Simple Mortgage. That's just our standard mortgage. So it's just going to be your standard alt deal. We do have rates starting at 3.39. So a bit of an increase there over the last couple of weeks, but still competitive. And then we also have our rental. So this is a great example here. So we do have technically a 5 property max on our rentals. However, there's an exception to that. If it's on their T1s, I can look at more. So if you start getting over 10, we start viewing it more as like commercial. But if you're, 5, 6, 7, and the deal makes sense, and a lot of that's and claimed on their T1s, it just helps cut back on paperwork and stuff. It's something we'll look at. My style of being a BDM too is I always try to give you guys an answer. So if I can't do it, I'll try to let you know who can. Especially the credit unions can get a bit more creative sometimes on some items. But for example, hold to company, we won't do it on the rental side, but a lot of our competition will. So for example, I'd probably send you to Optimum or Equitable because they're really good at doing those. So it's always great if you guys have feedback on what we can do, A, to be better, but B, so I can share that with other brokers in the industry too. We also have our open mortgage. That stays consistent. So that's 5.99, 2% fee, and it's just an open 1-year term. So that 2% fee gets split 1% to you and 1% to us. Our business for self, so we don't have a true stated right now. We had it right before COVID. It got shelved. It's on its way back, not nearly as quickly as I'd like to see, but that doesn't mean that our alt provable program that we have for business for self doesn't have a great niche in the market. It's in between your verified and your stated. So I'll go touch base on that a bit more where we're combining bank statements with 1-year financials. What I like about it is we have no restrictions on lending area. So whereas your stated is in major urban centers most of the time. So doing a lot of those estate acreages. And 2, we can do 80% loan to value and there's no premium to rate. So you can do the 3.39, our best rate, or generally any promo rate we come out with for that product as well. And we also have our Progress and Land Advance construction program. This is our insured draw. It's our only insured product. So all of these, I should mention, are alt being the B side, of course, and then our insured product for the draw. So it is extremely cookie cutter. I could talk easily an hour and a half just on that. So I will leave it with, I'll provide you guys with a statement or sort of brochure. Electronically, I'll follow up with this. But essentially, no matter the client's loan to value, it's client paid insurance. It's Sagent is our main go-to, but we'll also use CMHC. We do self builds. We'll do a builder and we'll do mobiles. So it kind of breaks it down. So we're starting at 90% or sorry, 95% for builder, 90% on self builds and modulars. One thing to keep in mind is the rate is prime +5 for the duration of the build. However, that does it 30 days prior to, you can decide if you want to rate. We just did a 5-year at 269, I believe, on a 5-year. So we've gotten much more competitive on our rates to keep those in, but if you do transfer out, it's an insured product. So they get insured rates and you can transfer out within 30 days of completion, sorry. So yeah, getting a fair amount of traction on that because we're one of the few that offers that in the broker space. Any questions? I see that chat.
It's just banter.
Ah, I like it. That's awesome. Yeah, so our business for self program. So generally we find these clients have good credit, if not great credit. You know, they've got equity or either equity in their home, or they're just not essentially pulling out income in their businesses because they don't want to pay income tax on it. So it makes sense. So again, going back, we can do 80% loan to value, promo rates, and then it opens up all the lending areas. We're going to look at their last year's financials. So we do like to see 2 years business for self. However, we will look at less. I just need 1 year file to give us an idea on what they have for expenses. And then if it's less than 2 years being business for self, we like to see same industry. So a great example would be, say they're a truck driver working for someone and they have like a contract, and now they're going over to business for self and they've changed to a contract. So just to show that even though they're new in business for self, there's a plan there, do a 1 or 2 year term with us, and then you guys take them over to the A side. So a couple of ways we can look at income. So we have a sole proprietor. So this is where we can take up the gross up approach. So I would see their T1s with a statement of business activities, and we can do net income plus 25% versus 15%. We can do add back approach, cost capital allowance. We can look at vehicles, like a home office. There's certain expenses, and feel free to reach out to me with these financials and we can go through them together.
While you're taking a sip there, there's a question that came through from David, which relates to the last slide. He's asking if you can go up to potentially 10 properties without considering it commercial. What about a borrower who only works part-time or not at all, but services based on the rental income?
Yeah, that's a great question. Those ones can be a little tricky. So it's going to depend how they have it set up. They're kind of case by case, but it depends how if they have it in a holding company or personal name. They can be hard to get done. So that one, let's take, offline, and I can kind of go through that with you, but they're sometimes a tough sell by the time you work out the rental income. It kind of eats away at their qualifying income, but it's a great question. Yes, and so add back approach, and then we'll use our T1s and then annualize the bank statements. So the T1s would give us an idea of what their expenses are, and then we would apply that to their bank statements. A great example of that is a lot of people in business for self are having a better 2021 year than 2020. Sorry, 1 second. So then we could take their expenses and apply that to the annualized bank statements there. Oh man, try not to cough on you guys. Sorry, just getting over the COVID.
So if you want me to just read the slides and you move your lips, I'll do the talking. This is an old inside joke. There was a point at which Deb, you probably tell this better, but there was a presentation that Gary Morris and Chris Kayett were doing, and Chris was starting to talk. And basically Gary kept interrupting. So at one point he just said, Chris, you just move your lips and I'll do the talking.
I like that. Thank you.
No problem. Give you a little break there.
Thank you. Okay, so incorporated clients. So this is where we're going to take their last year's financials and then combine with bank statements. So very similar to sole prop. I do find that generally when they're incorporated, they have quite a few more add backs that we can look at. So with the add backs, and then we can pull from their retained earnings as well. So again, it's nice to see if the company's cash flowing. But there's also lots of add backs we can pull from there. We can also do our revenue divided by net income gives us a percentage that we would apply that again to those annualized bank statements, gives us that usable income. And again, with these, feel free to send them over to me. Some great information to know about the company is how long have they had it? Are they the only owner? For example, if they're 50% owner, we would just have everything there. And then I kind of work backwards on our business for yourself. So if you can give me an idea of the income you need to get the deal to qualify, then we can kind of work backwards there. All right, so main highlights. So I always joke in our alt world that there's some, what I would call a hard stop. Our minimum beacon would be one of those. So I do need a minimum beacon of 500 to 550, depending on the product. We will look at alt credit. So if they don't have 2 trades for 2 years, we'll look at 12 months personal bank statements. What we're looking in there is we want to see that there's no NSFs, do they have a utility payment or anything in there that we can kind of help to mitigate some of the risks to show they're just not credit seekers. Amortization 30 years, nothing fancy about that. The reason why I have it on there is simply because we don't charge a premium for 30 years. So I'll always put as 30 as your default to kind of help get those ratios in line. Another hard stop is going to be our ratios, 45-50. Non-conforming, so 65% loan to value or less, we can look at 50-60. So this is a good opportunity, though. There are things we can do to kind of help get around some of these numbers. So if your ratios are really tight, give me a shout and let's talk about rate. Maybe we have to come off rate to get your ratios in line. There's some things we can do to kind of help tweak that. And again, throwing in even that 30-year AM might make all the difference too. So Deb, I was excited to share this one with you because I know you reached out to me with a larger loan amount, and obviously house prices in BC are a little bit more. It's beautiful there, but we do have a $2 million mortgage max now. Used to be 1 million, up to 1.5 on exception, and now it's a full 2 million. On these ones, I will prepare you. We do have a couple more eyes looking on it. It does have to go to the VP of underwriting, so you will be asked to provide more documentation up front. Just to help show the strength of some of the file as well. There's no tiered system, straightforward rates. And I would allow probably like 3 to 4 days for approvals on these right now, just because it does have to have the documents up front and a couple more people looking at it. But I did a rental in your guys' region, 80% loan to value, 1.3 million loan amount. So just to give you an idea there.
So Laura, when it comes to these loan to values and the total mortgage size, is it going to be dependent on the area, or is BC all considered to be the same?
Great question. It is going to be dependent on the area, but we've revamped our lending areas, so I'll touch on that. So I love that question. Thank you. We are doing more of a 50-kilometer radius on our major urban centers. So I've actually printed it for you guys on here, so I'll give you a good idea. So I'll link back to that one if that's okay. Perfect. Equifax or TransUnion. So going back to our minimum beacon scores, we are one of the few lenders that will take a TransUnion in lieu of Equifax. We don't need to see both. So as long as you submit it with your application, where this makes a big difference is in your scoring, really affects like your pricing. And sometimes we can even get the deal done. So it's just a good little cheat sheet there on the TransUnion. And then of course, Bridgewater Bank, we're really well known for doing the well and septic, ALR, sorry. We just can't have any farming on the land. So I had one where honestly, it was like $5 grand of hay rentals. I still couldn't do it. it makes it too hard to foreclose on because they feel that's how their livelihood is. So any farming makes foreclosing really, really difficult. So we always have to keep that in mind. We're hoping we don't go down that road, but that's where the investors' point of views come from. But we will look at house plus 10 acres, no outbuildings. And there is a little bit of premium on the rate for well and septic acreage, but we're one of the few that will do them in general. And again, that business for self can link into there and get it done for you as well.
Quick question on the chat. So Chris has asked, when it comes to rental income, subject property, suite, non-subject, offset, can you maybe dive a little bit further into how you look at rental incomes based on subject, non-subject, and offsets and add backs?
Yeah, all the fun. So how we use a rental calculator for our subject and non-subject. For owner occupied with a suite, it's going to depend where it's located. For ease sake, we'll just go with major urban center. It would be an 80% add back. Our rental calculator works out, it's not a true 80% offset per se. So if you use it in FileLogix, if you just do the drop down offset, it will be not as good as that, but it's better than an add back, if that makes sense. So I'll send you guys our calculator as well. And when you come across one, just reach out to me, because I find sometimes it does get confusing with the offset in FileLogix. Do you guys use Velocity now?
We're primarily on Velocity. There's still a few people that are working through FileLogix, but yeah, so we kind of do both.
Perfect. Okay. Because yeah, it works out to I think like a 70-something% offset, which is not as good as the 80 default in FileLogix when you use our calculator. So I'll send that. I'll just make a note of that and send that to you guys as well.
Super. Thank you. And the one other question was, how long is your adjudication or your turnaround times?
Great question. So we're about 48 hours right now. So that's for first file review. So it's going to really depend how many exceptions we need. So if you have, for example, a $2 million file that needs to be reviewed and manager review, that sort of thing, we're looking at about 4 days. If it's within, I'd say $500,000 or less, and we don't need a bunch of exceptions, you're probably in that 24, 48 hours. Keep in mind for subject removals, appraisal. So for appraisals right now too, we do have NAS Solidify RPS. However, we are making exceptions that if you guys want to order direct, we're all for that. The appraiser just has to confirm that they're on one of those lists. I'm a fan of ordering direct, but that's just me. Great questions, guys. So we'll also pay out consumer proposals, pay out Revenue Canada. So again, seeing a lot of those business for self people coming our way for a year, you guys clean them up. And kind of one of the pluses of us not having an A side is at renewal, they're back to you guys for their next solution. Bankruptcies will do one day discharged. We'll look at double bankruptcy. So double bankruptcy, we like to see generally 10 years in between, hopefully not back to back there, and a bit of a life story, right? I've had, a couple where they just didn't want to pay, or there wasn't really a whole lot of background there. So it makes it a bit tougher. Generally no property involved. However, we've eased up on this. So if there is a property involved now, we will consider it. We just like to see that there's no loss to the lender or to the insurer, but we will take a look at those. Child tax benefit we'll use as income. Kids can be 16 years or younger. Mat leave we'll take a look at. We'll use 100% if going back within 2 months, and it kind of scales down from there. So let me know. I can always look at that policy for you as well. We will look at child support and alimony as only source of income. So a great example of this is I had a file where the partner, they obviously got divorced. She had child support, alimony, CTB. She had started going back to work, but it wasn't guaranteed. So she wouldn't have that average for 2 years. So we approved her using solely this amount of income. Because her exit strategy was in 2 years after her 2-year term, she'd go back to her broker and she'd qualify on the A side. We will also allow fully gifted down payment. So on rentals and on owner occupied, we view gifted down payment as own resources. We've even gotten a little bit softer on who can gift. We will accept a gift from a spouse. We would just need to see the spouse's bank account though on that. We've even done like a godfather or godchild kind of relationship, that sort of thing. So getting more relaxed on that as well. One thing I will point out on our gifted funds, we do need to see source of gift. So that does not mean we need to see a history or anything like that. Just simply for our AML policy, we would just need to see a snapshot or even a copy of the check showing that the gifter's ability to send the funds. All right.
One more question.
Yeah.
Does Bridgewater Bank have a commercial division?
Great question. We do not at this time.
Okay, what about, this is the worst one, mobile homes on leased land?
Great question. I know, especially in like that in the area there. Unfortunately, we don't do lease land. We will look at mobiles, but they do need to be 10 years old or newer. Good question though. So loan to value. So we will look at 80% loan to value on purchases and refinances, 80% on condos, and 80% on rentals, including major urban centers. That's going to include Kelowna and Kamloops. And then we do rentals now outside of major urban centers. We just lower the loan to value. And as someone asked earlier, which was great, rental calculator for subject and non-subject, and then add back for owner or owner occupied with a suite.
So Vernon's not considered a major urban.
We will, what's Vernon? I'll look it up here once I change my screen. I feel like it's a B or a C location. So yeah. It depends where it is. I think it still falls in a little bit of that 50 of that radius.
Yeah, like Vernon is, I mean, it's the city itself has over 40,000, 45, something like that. And then within the immediate vicinity, we're probably around 70. Yeah.
And I know I've done deals in Vernon for sure. I'm just trying to remember what my cap is for loan to value. So I'll show you here. So just this couple of months ago, we just changed, which I love. We changed back to a radius. So it used to be, if it wasn't on the list, you know, we would look at 65. And then it changed if it was a 50 kilometers versus on Google Maps. But Google Maps, obviously the roads don't go on straight diagonals, right? So they changed it to a radius. So essentially, if it's major urban center, it's for sure 80 we'll look at. If it's what we call a main center, so just a little bit smaller like Kamloops, we're at 75, but we can still go to 80 if need be. So this gives you an idea of the lower mainland. So of course, Vancouver will go to 80, Abbotsford and Chilliwack, 75 to 80 there. So out to Hope and stuff. And here's Kelowna and Kamloops. So yeah, so Vernon, as I mentioned, it depends where it falls in there. So yeah, I guess if you're closer towards Kelowna there, we will look to 80. And I can do 329 at that location if it fits the other criteria. And then of course, up around here, Lagoon Lake, Lake Country 2 will go to 80. And then we got Penticton, Summerland, Peachland. So the best thing to do, honestly, is if you have an address in mind, which you guys have been great at, just flip it over to me. I've got a little chart for some of the details on that you can give me just to help pricing. But I've got a great mapping tool now that we didn't have before, where I can literally pop in the address and it'll show me if it falls right in this radius here, and I'll just ship that to you, and it gives us an idea where to start on for loan to value and pricing.
So is there any consideration given, like I'm just looking at this map and thinking like a lot of our lending area, especially for those of us that are a little bit on the north end of the Okanagan, we're kind of Vernon, Coldstream, Lumbee, and then as we go north, we got Armstrong, Enderby, Salmon Arm. And then as we move out kind of towards the east, there's Falkland. So like, is there some sort of like a radius given to a place around Vernon?
Yeah, so Vernon itself, so on top of this, great question, we'll also have our list that still applies on our website. So if it falls on there, it will tell you exactly what it's labeled. So yeah, sorry, if it doesn't fall in this radius, doesn't mean like that's the only places we'll go 80. That's just for the biggest radius, I should say. So generally, we go by the radius. If it's not on there, we check on the list. If it's not on there, then we default to 65% loan to value.
Okay, so even in kind of a rural area, you might go to 65.
Yeah.
Okay.
Yeah, because then we can put it in non-conforming, and that's how we get around that. Yeah, great question. Vancouver Island too is another one. So seeing a lot, obviously Victoria and Nanaimo in there. So getting out to Souk and stuff, a lot of our competition doesn't go there in our space, we're finding. And Alberta, I'll skip through there, but perfect. So as I mentioned, we have rates starting at 339. So when you guys are sending me your deals to kind of vet and price out, let me know what it is you need too. So maybe we're coming off that rate. You know, there is a certain spread I still have to hit, but maybe we're coming off the rate a bit to get our ratios in line, and we can up the fee a little bit. Let me know if I'm competing with someone, if you're competing against a renewal or anything, or honestly, even just another lender you're thinking of working with, let me know and I can save you some time there and beat that out. Or if not, I'll be upfront about it. But we're risk-based pricing based on marketability. So that gives us some flexibility. Our 1% fee, I can charge up to 1.5 if you like, and we split that half. However, you're welcome to charge your own fees as well. It's your book of business, so I always leave fees up to your guys' discretion. You know how much you worked on the file and what you've done with it. And then terms, we do offer a 1, 2, and 3 year. To be honest, I'm doing mostly 1 and 2 year terms. 3 years, pretty expensive right now. It's about a full percentage more. So seeing more kind of that 2 year. At renewal, we don't pay a trailer fee at renewal, and then a renewal fee for the client is $300. We have not charged that to date, but it is technically on there.
One more question from Chris, just a quick, I guess, a rate specific question. He's asking about what is the rate on a 2-year mortgage, 910,000, 65% loan to value. I'm assuming Chris, this is in Kelowna. Beacon score 680, 802.
680 Beacon?
680 and 802.
Yeah, so that would, if it's in Kelowna, that would fit possibly our 339, pending it's not well and septic, if they don't have any consumer proposal in the last 12 months. And yeah, income would be standard. We don't premium for income really. And then I'm guessing it's a purchase.
I don't see it, so
Okay.
don't know.
Okay, no worries. Yeah, so that would, it sounds like that could be a possible fit for the 339 on a 1 year. 349 or 359, sorry, on a 2. Perfect. So as of last year too, we did launch our volume bonus. They call it peak performance. It's a marketing term for volume bonus. So some really attainable numbers here. And I definitely think you guys could hit this 5 million. I know you guys were close last year for sure. So I'll send you, Deb, quarterly statements. And do you want me to copy you on that too, Pete?
You can, or you can just send it to Deb. She sends everything to me too.
Perfect. Okay. So on here, essentially you'd be paying you guys an extra 10 bips. So here's our standard comp is 60, 70, 80 on the 1 through 3. And then that's another 10 bips on there. So on the 5 mil, and then honestly, our 10 million is really great. And this is us getting better with policies, and this is us increasing, you know, lending areas and coming out with products to help get you guys there. So this is an add-on to that essentially, right? So if we can do 10 million as a team, and I'm happy to help wherever I can as well, that would be $20,000 in volume bonus for the year too. And then we also have our efficiency bonus, which would be another 5 bips to everyone. And that gets paid out in January. So everything I've gone over today can be found online. Our product information, brochures. I'll send you guys that cheat sheet I have, as well as the draw program. Our lending areas, the list is on there. But like I said, if you have a certain address and you're thinking it's a bit more rural, but send it to me. I'll happily look that up for you. Our rental worksheets on there as well. And friendly reminder, you can order direct from appraisals as long as they're on Mass Solidify or RPS list there. Perfect. Any other questions? You guys have been great. Perfect. Okay, so I'll follow up with that. How are we doing for time? I think I'm just at the cusp there.
Right on. Yep.
Good timing, and thank you so much for having me, guys. Your support's been awesome. You're always a pleasure to work with. Your files are incredibly clean. So whatever you guys need help from me, let me know.
Perfect. And thank you, Laura, for the presentation. I just wanted to quickly ask the question. So for that, the Bridgewater portal, that portal that you showed on that last slide, there's no username or password required to get on there, is there?
You got it correct. Yeah, everything's open to the public. BWB broker info, and then you can just access everything there.
Perfect. Awesome. Well, thank you so much. I will make sure to send out any info that you send my way, and I'll send it out to the brokers. I'll also post this for anyone that's missed it. Thank you again.
Thanks, guys. Enjoy your meeting. Have a great day.
All right.